to today's update. My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com. Yes, we should be up and running. So guys, thanks so much for joining me this morning, and also thanks so much if you're watching this live. If you like the presentation, don't forget to support by following us and liking our videos on YouTube. Very straightforward. Just click on the little link up here and then hit that thumbs up bottom down here. Okay, good. So we're gonna take a look at the markets as we usually do at this time of the day. It's 9:06 a.m. in London, and yeah, let's begin by taking a look at the euro. So the euro is trading slightly higher today, which is fine. I said on Friday that if we take out 1644, that this market could have a bit of a push to the upside. And we got a little bit of a push, but that was pretty much it. And I suspect we can continue to really move to the upside. But I think at the end of the day, I think with the downtrend in place, in particular in the daily chart, my preference is really for bearish positions. I think what happened here on last week is that weak short positions got stopped out, and they're probably going to try to get involved at higher levels, and at higher levels as well. Slightly longer term traders that could not sell on the back of the ECB rate meeting, they're probably selling with stops on the other side of this high. So I'm maintaining a bearish bias in the short term. Again, I think it can go a little bit higher, and I suspect it probably up here. I think the market is going to be more interesting to short sell. If we take a look at the crypto markets and Bitcoin, they had a significant sell-offs on last week. So you might remember the price was really boring for a while. It moved to the upside. It was trading here, but I said maintain a bearish bias below this high, and yeah, we went all the way down and we touched that first profit target. We said look to sell at 64.97 for a decline down to 59.19, decline of 550 pip or $550, and that played out as projected. Now the market bounced to the upside, and I suspect that we'll probably continue to see further declines. The price of Bitcoin has clearly traded below the April low and also below the the February low, and I mean, technically we should continue to move to the downside. There's no reason at all for us to sort of change our bias here. So I maintain a bearish bias, and if you look at this chart and say, okay, so where can we sell then? Well, if you look at the 4 hour, we'll just do the same thing we did last time. So this is a high, and just by looking at the charts, can just see that this is potentially support. I could potentially turn into resistance. Let me see if I can actually highlight this little area. So somewhere here, and that will be sort of first observation. Second observation would be, let's put some fibs on top of it. This is your 50%, third fib. Yeah, so let's just stick with this. So 50%, actually let's make it the highs of these little highs. Now I think it would not surprise me at all if we actually trade a little bit higher, touch 6,400. But then from 6,400, that would sort of be the ideal entry for a bearish view. And then I suspect traders are just going to target the lows. They'll target the new yearly low, and you just look to your left. There's some more lows like this, and these are all short-term levels, but the big 37. So no change to the outlook. In general, if you want to know more about crypto markets, I did publish an update on Friday. Here, it's called, Are the Crypto Markets Getting Ready for Another Meltdown? This was before the last little push. You can find that on AlexFX00, which is my Twitter handle. Now let's continue. This is gold, and gold, the idea was to sell here. In fact, we talked about selling already up here. It's looking all right now. I think it could easily just push up higher, but around these levels, I want to maintain a bearish bias. You can clearly see how the price is creating lower highs, so there's no reason at all for us to sort of deviate from that plan, and I think the market could potentially touch this level down here, which is really the December 2017 lows. So this low here is from December 12th. So further move to the downside, no reason at all to change your bias. Here's crude oil, unfortunately got stopped out of this one if you were trading this. So you might remember we turned bearish. We got stopped out the last time here on being long, and then we turned bearish, and sort of a very solid setup was this selling here for us to go down, and then we maintain a bearish price here. But at the end, the way you just buy, like if you just think about it, all trends come to an end, right? We always give back a bit at the end. So one idea is, try to stop following trend, or sort of get out when before that happens. It's definitely possible to do that. You don't have to hold on to it, but in this presentation we stick with the trend because we have a view every day, right? So we stick with the trend until proven otherwise, and on Friday we got proven otherwise. Why? Because the market stopped creating these lower highs. So now looking at this, do we want to buy up here? Well, from a risk reward ratio perspective, no. Why? Because stop as a minimum probably needs to go down here at $64.31 or down here. So that's a 7.8% risk to potentially make 5.4. So it doesn't add up. As well as a little bit overbought. So I think if we can go down, maybe revisit this high, but ideally down to 66.73, then I suspect here in this little section here, I think traders are going to look to get involved. And the new trend defining level is down here. And that is the 63.53 level. German DAX, it moved to the downside. In general, I mean, as you probably already read here on the homepage here, U.S. President Donald Trump, threatens to impose 20% EU car tariff, and it's a lot about this. It's just about trade wars right now. A little bit of a risk off that we're seeing. S&P is down a bit. Gold, on the other hand, is not supported because people prefer the dollars and the safe shores of the dollar rather than gold and metals in general because of high interest rates in the U.S. So that's really what's going on. It's a bit of a risk-off situation. That, of course, is causing the DAX to trade to the downside. And, we took out this low, which is the May 31st low, and the market may potentially head lower to the March 25th low. But looking at this from a big picture time frame, or yeah, of course it can move to the downside. I guess it's technically fine to be bearish below Friday's high. So this is Friday's high. It's perfectly fine to be short-term bearish below that level, but it's a bit of a trick situation. And if we're trading back in the middle here in a day or two, then that would not surprise me. So a little bit of an unstable market for me, the DAX right now. Okay, let's see here if we can, if we have any questions. So, all right, so we don't have any questions. That's fine. Don't forget to check out the technical analysis section, and don't forget as well to just hang around and stick around here on the home page. Make sure you have it loaded. So we made some changes, and we'll see how that works. So we had some really good success with the website. The website's been live for less than a year. We went live, I think, officially on August last year, I think it is. And we had some really good, people, a number of people to come and read the articles and things like that. But we're changing things up. Hopefully it's going to be better. So Nathan is now covering the sort of the European early US shift. So Nathan is going to be publishing articles from more or less 8 a.m., sometimes a little bit earlier. And then he's going to publish articles until about 2 p.m. Why? Because then he covers any European movements, European session data, and then as well the 1:30 data from the US. And as you know, Nathan has been trading for a hedge fund for a few years. A very, very experienced short-term trader. And it's really great now that he'll be covering these hours. So what he'll do is he'll share some of his setups in the morning, but then his job is to, in essence, keep track of the markets. And if something interesting happens, he will publish shorter pieces on that and as well cover the news. At the same time, Devaya and Vivek will be publishing the macro stuff you're already reading today to prepare you and have this longer term outlook. So they'll continue to sort of provide stories like that. But their focus now is to make it more in depth and sort of provide you an extra edge on the macro front. So they'll be continuing to do this, and obviously continue to do the morning update and sort of week ahead outlook and things like that. So those are sort of the major changes. My stuff, of course, morning update in the morning, and then a few articles during the day. And Yuri as well, he publishes a few articles every Monday, Wednesday, and Friday. So stick around. In fact, we have another little gadget that's gonna pop up over here. It's not done yet. It's just been sent to production, but it's gonna be a little sort of audio player. And that little audio player, it's going to, when I speak or one of the other analysts speak, it goes out live to you guys. So it's like a live squawk, where we'll provide you guys with quick updates. For example, market trading below a specific level, or somebody said something, and that's something that should hopefully be out in the next month or so, and should hopefully be in this section here. So there's a lot of reasons to stick around. So don't forget to leave Trade Cap then open like this for more updates. Very straightforward. Click here, read. You're done with it. Close it down. Very straightforward stuff. Alright guys, have a good day, and I'll see you guys tomorrow at pretty much 9 a.m. London time. This is Alex from TradeCaptain.com. Actually, here I got a question. If we had to take a look at Bitcoin, yes. So we looked at Bitcoin as the second market today. So Bitcoin maintains that bearish bias, and there's little reason to sort of anticipate any major change here. I think not necessarily right here, but if we squeeze up maybe 6,400 or so, I think that would be the ideal entry for traders that they're watching. So a further downside, no reason to buy, and as long as you create these lower and lower highs. One point that's going to happen, and at that point I'll go live myself. I bought down here, and I bought in last year on the run up, but not in Bitcoin, but in Ripple and Bitcoin Cash. So I'm an experienced buyer. I have shorted a few times, but I prefer just to buy because the risk reward ratios on long positions is much better than short positions. All right, guys. Thanks for watching, and thanks for liking. Thanks. Also, what's my prediction for a bottom then? I've got a question here. So unfortunately, there's no prediction. The way this works is very like the analysis style I have is trend following. And if you look back at maybe 500 years of speculation that we humans have done, the markets will, it's really impossible sort of to predict the target. There's so many bubbles, and unfortunately this has a bit of a bubble feeling to it, just because people don't know exactly, what's the use. Obviously people know what the use could be, but no one is necessarily using it. Anyway, so you have this very strong bullish uptrend and then very, very strong bearish downtrend. So I wouldn't be calling a low at this market, but I think that what could be interesting, from this big pattern, is maybe down at maybe 4,000. I think that would be an interesting level to look to get involved. If that level doesn't hold, we'll probably target even lower levels. From purely sort of, it's difficult with the macro fundamentals, but one thing is for sure certain, and I know it's not sort of what people want to be connected with, but one thing is for certain is that the crypto markets are used for illegal money laundering and things like that. And Interpol did analysis a few months ago, a few months ago, and I think about 10% of the volume is because of illegal transfers. So from that perspective, the actual use of cryptos amounts to a daily volume at one point, which was a tenth of where the volume was up here. So what is that translating? Well, maybe we should be trading 90% lower than 19,000, which makes that let me see here, which means that maybe sort of the true value of Bitcoin is around 2,000, because at that level, people that are using it, because that's the sort of usage level of this coin for certain, not for certain, but quite likely. Probably you need to add another 10-15%. So let's add another 10%. So then 20% of its value at 19,000. Yeah, between 2 to 4,000. That's sort of where the real value, where the market cap equals sort of the daily usage that people need it for. So maybe down there would be a good opportunity. In fact, this big push after a big party, imagine you going for a nice party or a big party and you're partying all the way until the early morning. You have even the sunrise. Well, obviously after that you need a big break, and this is exactly, I think, what is happening here. After such a big move, it will quiet down. I know this for a fact. To give you an idea, I know it's not the same, but with leverage it's relatively similar. This is the euro. In 2014 it tumbled with a crazy amount of pips, 25% and 3,521%. And then after that the market just turned sideways, and it did that. And I think this is what's happening here right now. So it will correct, and if we are in a bear market like this one, where the market moved up with about 2,000%, then the market peaked here, say 2014, and then it traded sideways, and it was first here, sort of obviously bottomed out here, but it was first here in 2015 by the end of it. So 2 years bear market, really. It wouldn't surprise me if we have something similar like that. So for now, let's just stick to the bearish view until proven otherwise. Alright guys, thanks for watching, and catch me tomorrow. Thank you.